Hello ladies and gentlemen, welcome to ChrisFX. Today we will be talking about the concept of liquidity. Many of you are new into trading, many of you don't know what this concept means, the way actually we are using it. Maybe you are aware about what liquidity is as a general term when it describes an asset, but the way that we are using it in trading is way different. And I'm gonna show you the different ways that you can use liquidity with this video in order to either create a strategy around it or perfect your existing strategy. Let's say no more and let's begin with the video. First and foremost, the way that we are identifying liquidity is from time frames such as the weekly time frame or the daily time frame. And what we want to see in those occasions is, let's suppose that this is a high, is the high to be taken. This is one of the situations, one of the ways that you can use it, and let's magnify it a little bit. Okay, so you are expecting on a daily or a weekly time frame for a high in this occasion to be taken, and this is the mistake that most of you are doing, and I'm gonna be clarifying it for free today for you. And then you're looking on a lower time frame for some form of pattern, let's say, to be created or whatever you are trading. I have a very robust strategy that hasn't lost one time in the past 3 weeks, and I have everything recorded, plus the proof of my withdrawals, everything is there. And then you are looking for some pattern, whatever the hell you are trading. Is it an order block on a lower time frame? Is it an FEG or whatever you are trading in order to take that down? Supposing that liquidity now has been grabbed on a higher time frame. This can also happen, of course, the exact opposite way, where we are moving, let's say, downwards on a higher time frame, such as the daily or the weekly time frame, and then you see some grab of a low in this occasion, okay, which is a point of liquidity. Then you scale down to a lower time frame, and let me do that. Let's say then you scale down to a lower time frame, such as the 1 hour, let's say, or let's do the 15-minute, which is one of my favorite time frames, and the 5-minute, which I also love, okay? And then you're trying to identify what you are looking for. I don't know what this is that you are looking for, and you're taking the trade from the thing that you are looking for. If you want to learn what I am looking for, you can easily access, of course, by the way, guys, we have the best prop firm deals right here. We also have instant funding with Tick Trader, Day Traders, and Blue Guardian Futures. And I have the top 2 prop firms right here. On Take Profit Trader, I'm withdrawing every single day with proof, of course. It is pretty easy with my strategy. And I have my personal account as well. Anyways, if you want to join, and if you want to learn through the mentoring, where I'm giving also access to the academy and the signals for free, you can go to my website, which I have down in the description, go to education with live streams, and it will take you to WOP, where you can purchase the mentoring. And if you don't want to be paying the fees, contact me at chrisangelstv@gmail.com and tell me that let's find a deal through crypto payment or PayPal or whatever the hell you want. Anyways, let's continue now. So we talked about that. This is one of the ways to look for liquidity. And I'm going to be showing you an example right here, right now. And we can go ahead and say NASDAQ right here. And we can do the CFD NASDAQ. It doesn't matter what we do. Okay. And I'm going to be showing you what I mean by liquidity. I'm going to be showing you what we talked about beforehand with the graph. Okay, one of the ways that you can identify liquidity, as we said, is after the break of a high. And if I take you back in time, of course, this happened again and again and again. A high, a proper high that was broken at some point in time was this high right here. We grab this liquidity, and afterwards, of course, some time passes, enough time for your pattern to be developed, and there you go, you have a down move. Then, in this overall uptrend, we keep going, you grab this high right here, and then price makes a down move. Okay, enough for you to trade it on a lower time frame. Then what happens? More liquidity is exactly right here because this is a valid high. price breaks above it, and then retraces. Easy like that, easy as that. Now, the problem with most of you is that you cannot identify a proper high or a proper low in order for you to identify liquidity. You would be identifying this high properly and this high, but this one you wouldn't be identifying it as a proper point where there is liquidity. What do we mean with liquidity? Because we didn't explain that actually. We mean that there are orders above those areas for those people who on a lower time frame identified as an example those areas like order blocks or whatever the hell they identified. They sold on a lower time frame such as the hourly, one fake move, two fake moves. Then price goes ahead and grabs their orders, their stop losses, okay, because a stop loss is an order, okay, right here it grabs the stop losses and price moves down. Then it continues with the overall uptrend. People go short from areas such as this order block, which is the dump money. They get one fake move, two fake moves, price goes above and retraces a little bit. The very same thing happens later on. So this concept happens again and again and again. Same here. If you look at it, you will almost always see a move from those support and resistance areas or those order blocks. Okay, liquidity above those areas. Some people extend the stop losses. It grabs every single one of them and price retraces. Okay, let's go now back to the daily time frame. Because now I will tell you that the same concept holds from the other side. And a very nice way to trade that, instead of going against the overall trend, so instead of waiting for the highs in this uptrend to be broken and then for you to be shorting, okay, against the overall trend, what you can be doing in such occasions, assuming that the trend is going to be continuing, you can be identifying lows. In this occasion, we have an uptrend. So you can be identifying points of liquidity of the higher time frame, such as the daily time frame. In this occasion, it's going to be lows, okay, right here, where again, on a lower time frame, what happens? I'm trying to explain the logic. On a lower time frame, people, you will see that there is an order block as an example here, where people went long from, okay. They get stopped out and price reverses instantly. So the liquidity, the way that we use it right here, has been grabbed. In other words, the stop losses have been hit. And then what happens? After the stop losses have been hit, price continues with the overall trend. So what I have also done, and we have increased our winning percentage drastically, we were going ahead and we had above 90%. If you don't want to believe it, if you join, we will see the truth. We were above 90%, which is something that changed during May. Of course, I have made a ton of money. During May, I lost some money, which is not a great amount by any means. But then I adjusted and I said we are following only the trend. We are never going counter trend. And we are back, ladies and gentlemen, to above 90%. Actually, we have 3 weeks of never-ending trades, at least 1 to 2 trades every single day with 0 losses. I'm withdrawing every single day and I'm showing it to my members. Okay, every single day I'm getting withdrawals. Let's now continue and see. Let's go back actually. Let's go back where we were. One moment. Okay, let's go to the daily time frame. I'm gonna be redoing it. So now the issue, as I said, with you people is that you cannot identify a proper point of liquidity on a specific time frame. As an example, on the daily time frame that we are right here, you would be identifying only this as a point of liquidity or this, but you don't know that a proper point where stop losses lie below it or above it. In this occasion, we're trying to see below it in order to continue with the overall trend, which is an uptrend. is a proper low. And this right here, ladies and gentlemen, is a proper low. Why is that a proper low, you might ask, Chris? What the hell are you talking about, Chris? It is a point that is lower than the low of the candlestick to the left and lower than the low of the candlestick to the right. And many people cannot understand my strategy, which is way, way more advanced than this thing right here. But if you learn it, you will be always winning, or almost always, believe it or not. My members know it and we are rocking it, and I have all the proof up there. So if you're gonna become one of us, come. If you don't, I'm making enough money from trading anyways. But the thing right here is, this is a proper low. So if you go ahead and look for liquidity down here, you have lost the game. Liquidity has to be looked at over here in this occasion. And it depends on which time frame you're gonna be going ahead, and you're gonna be looking at your pattern that you're trading, because you might say, I'm not trading patterns. If you're not trading patterns, or if you think that you are not trading patterns, you don't know anything about trading. So here I already see a bunch of stuff. Okay, for my strategy, believe it or not, we would have been in this trade and we would have won. We would have caught this trade exactly right here. And believe it or not, if you do the one-on-one mentoring, I'm gonna be proving that to you. Exactly. We wouldn't be waiting at any order blocks right here. We wouldn't be waiting at any FVGs. You might think, okay, price reacted from this FVG. No. We would be having an exact tiny little line, maybe a second line somewhere here, and we would be positioning either here or in both, or with reposition, in other words. So one way that you can look out for liquidity is this way, okay? So take a higher time frame, such as the 4-hour, the daily time frame, or the weekly time frame. Follow the overall trend, okay? Follow the overall trend. We are in an uptrend. Identify proper lows, such as those lows. Oh, sorry, this is not a proper low. This is a proper low, so a point of liquidity, and try to continue with the overall trend, okay? Another way to do it is, since you have confirmed, let's say, an overall trend on a higher time frame, go to a lower time frame. Here we know that we are moving in an uptrend. Go to a lower time frame and try and find those points of liquidity on the lower time frame instantly. So instead of going from the higher time frame, which is the daily, the weekly, the 4-hour, let's say, and identifying, let's say, a proper point where orders rest below it, stop losses, and waiting for that, and then looking for your pattern for the continuation or for the reversal, what you can do is identify the overall trend and instantly go to the lower time frame and say, since I am in an uptrend, I'm only gonna be taking buys here, grab of liquidity. Then we continue higher. Do we have more grabs of liquidity? Here, grab of liquidity. And then we continue higher, okay? Do we have more grabs of liquidity here, guys? Yes, grab of liquidity. And we continue higher. Anything here? Absolutely. Proper low. Grab of liquidity, and we continue higher. And you see this concept is playing again and again and again. Here what happened? If you knew how to identify that as a proper low, liquidity was grabbed, we tapped on the FEG, and off we go. Easy as that. Okay. And the thing that we did, as I said, is, for example, of course, I'm not using just the FEGs or the grab of liquidity. I have a very specific strategy that there is nowhere to be found as a concept. It is already online and you can find it for free. But the way that I have developed it, I have backtested it and I'm using it, there is nowhere to be found on YouTube. I can challenge any YouTuber any single day with the same value account and I will win every single time. This thing does not exist anywhere else, guys. Okay? Anywhere else. Now, what we did, again, Instead of us going ahead and trading up and down and up and down with the concept that I have developed, we said that we have certain rules and some more rules. We are identifying the daily bias. I'm going to be making a new video the next Saturday on daily bias and how to identify it without any indicators. But we have also added some indicators as a double confirmation of a potential bias change. So now we are taking trades only towards the direction of the overall trend. And this, of course, after a bad May, the market conditions weren't good during May, what can I say? But we hadn't done this thing to go only with the trend. So we were a little bit humbled, let's say, through May, even though I made so much money the previous month that this is a very, very minor thing. I actually spent in May the least amount of money that I have made through trading on one of the other months, okay, or one of my small months, because I have made also very large amounts of money during some months. Okay, so it is just a lesson for me. It is money that I could afford, and now, of course, we are back into making thousands and thousands from trading. So, guys, these are the ways that you can use the liquidity. Many people are confusing you. Let's go ahead and do a recap. You can either go to a weekly or a daily time frame, or you can go to a 4-hour time frame, and you can identify the overall trend. This is what I suggest, the overall trend. Identify a proper low as I taught it to you. Then scale down over here on a lower time frame and identify your pattern to go higher. And I'm gonna say here lower time frame. Okay. And identify your pattern here to go higher after the grab of liquidity of the higher time frame. Or what you can do, identify the overall bias again from those time frames, and then instantly go, let's do it like that, and then instantly go to your lower time frame. So you will be taking trades only, let's say, with the weekly or the daily bias, and then now we are supposedly on the lower time frame if we have a bullish bias from the higher time frames, and identify the grab of liquidity there, such as in this occasion. Stop losses are being grabbed. People now are reversing the positions in fear of missing out, FOMO. They are selling aggressively, and you are going ahead and you're making the beautiful money. This is my advice to you, and this is how we are using the concept of liquidity when it comes to day trading that we are doing right here, or to swing trading even, okay? But the thing is that we are not using the term liquidity as you will find it online. We are using the term liquidity. When we are using it, we are referring to stop losses, okay? Stop losses lying above a high or stop losses lying below a low. This is the way that we are using the term liquidity. So if you guys found this video helpful, then go ahead, leave me a like, subscribe to the channel and turn on the notifications, because otherwise you will not be receiving notifications from YouTube. Make sure that you go ahead and book an one-on-one mentoring if you're gonna learn about my top strategy and the only strategy that I'm using in order to get payouts on a daily basis with proof. And also be aware of the fact that I'm going live every single day in my Signals channel, every single day. But if you book the mentoring, I'm gonna be giving you 1 month for free in the Signals to try it out, and also 1 month for free in the Academy. The choice is yours. You don't need to learn anything else. Even if you do the mentoring, you don't need anything else from me, and you don't need anything else from anybody else. You don't need to be paying, let's say, subscriptions or anything like that. So this is gonna do it for today, traders, and thank you all very much for watching. Until next time.